Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on February the 24th, 2020 with a daily Forex market analysis and live trading examples going on. And we're going to first get to our disclaimer real quick, just to quickly remind you that this webinar is for illustrative purposes only. And with that, we're going to go to our live action screen where we have the forex-trading-unlocked.com website already pulled up, and we have our workstation page pulled up. Now, here we have the Euro US dollar chart coming up, and as you can see, the market on Friday had a really explosive rally, setting off a nice bullish engulfing buy signal. And then today, the markets had retreated very severely because of the coronavirus impact. Now, the U.S. markets have now opened, and since that has occurred, the Euro U.S. dollar has started to become a bull once again, making a run at resistance. So let's take a look and see what's going on here. So our major breakout pivot for any real true bullish momentum would be above this $10.94. Below there, what we're going to do is we're going to key off of the low from a few sessions ago, down by 107.75, and the high from Friday, right around 108.66. So any breakout upside or downside, that is our directional bias right now. Technically, this market is oversold. Fundamentally, this market is ready to get buried again by the coronavirus. Recent outbreaks in Italy definitely bids very fundamentally hard for the euro. We have the virus had seemed to be contained and in not necessarily a good place, but not growing, and not so much of a problem in Europe. But now, as of this weekend, and that would be probably why the Euro US dollar up so much lower. I mean, look at the market settled at 108.47 on Friday, and it opened at 108. What was it? 108.14. So that was a nice 30 pip little gap there. So which we had originally been long this market going in since Friday, and we had reversed gears today. We've been stopped out because we figured because of the coronavirus that any major change this weekend would cause a sell-off, which obviously it did. Right now, though, it is reversing those gears. So it'll be very interesting to see how dollar weakness, if it continues into the rest of the session. So the U.S. markets just opened 20 minutes ago, so right now we have to absorb what's going on there. In fact, we can look at you have German GDP, which comes out yet at 1 o'clock today. That's a big deal. And let's see, nothing really left for us for the day. So yeah, so there is an EU number that could be very big come 1 o'clock. So we have a few hours to go for that one. Whether that's bullish or bearish, the euro remains to be seen. I think the coronavirus fundamental is the major thing that you really have to be concerned about. But right now, bulls don't seem to care too much about it. They seem to want a correction with the euro US dollar, and that is underway right now. So we are hovering right below this 108.66 area. If we can get above that, well, then I have to say the bulls are back in control. So use caution selling into this current move, even though the fundamentals are looking very strong against the euro. So technically this market's oversold. Technically we have a buy signal from Friday with the bullish engulfing line, and we just have a lot of volatility, and I think that's something you need to expect. So if you are a aggressive bull, you would want to be long against this $7.75 area, and if you are an aggressive bear, you want to be short against this 108.66 area. So right here, anything above here confirms the strength of this technical buy with the bullish engulfing line. That would be this rally that we had on Friday. As you can see, that Friday had eliminated the range. It encompassed the whole body of the prior 3 sessions, actually 4 sessions, 5 sessions. Yeah, it went all the way back to 6 sessions back and erased all of those losses for a whole week's worth of trading. So very bullish sign right there on a technical basis. So the question is, what is stronger in this world, the technicals or the fundamentals? Now, technically, this market's been oversold for quite some time without having any real correction to stabilize even maintain the bearish momentum on a stabilized basis. So we shall see. Right now, we are running the bids right now as we talk. You can see that this market is ready to explode higher. So use caution, like I said, as a bear, because we are in a corrective move right now as far as technicals are concerned. Fundamentally, it's really hard to generate a corrective move right now for the Euro US dollar. So that's what we have for this European currency. Now let's take a look at the British pound US dollar. So we'll get into our trades after we review the analysis here. So the British pound US dollar, right? This market is definitely a grinding bear. It had been a bull for months. Then it settled into a very choppy range trade for the past 4 or 5 months. And now we're definitely confirming lower move lows, lower move highs. It's just grinding lower, but it is not that weak. So being one of the biggest components of the dollar index, it's really tough to use the index actually as an indicator for it because it's been sideways for so long versus the dollar. So we really need a breakout one way or another. We don't see this influencing the dollar index very much, except for as it does continue to grind lower, it does give some bullish credence to the US dollar. So the pivots we have here are $1.3072 and $1.2850. A breakout either way would be what we would be looking to chase. Any breakout to the upside would be higher move highs, taking us off the neutral to bearish bias. Right now we've been making consecutive lower move lows, lower move highs, so we definitely are in a bearish trend for the short term. Real quick, we're just going to flash over to Twitch. We have no questions. We have none on YouTube either, so then we will just come back to our chart. So there are no questions out there. We're going to continue now. We're going to go look at the US dollar Swiss. This is another market that we have a trade on. We will get back to that after we get through the other markets. First, we want to cover the analysis. So we have trades on in the euro and the US dollar, and we're looking for another trade for possibly a couple currencies. So the US dollar Swiss, as you can see, the US dollar is falling apart versus the Swiss. It is making newer move lows. So the bears are back in place when it comes to this one. The dollar is very strong no matter what and should remain strong with this coronavirus pushing the pandemic level. But with the Swiss being part of the EU, surrounded by that area, and being so close to Italy as well, you would think that there's a flight to quality going on in the Swiss market versus most currencies. And you can see that we had a big sell signal on Friday. We had a bearish engulfing line here, which indicates lower price movement. The market came back pretty significant today, but as you can see, just like the euro, it's reversing gears. So the dollar's not doing too well versus two very strong European currencies today. We're going to use the pivot point from 2 sessions back, that last higher move high at 98.47 as our directional. Anything above that, the bulls are back. We're looking for a breakout with this dollar pushing that 99 cent to 99.5 area, somewhere up around here. Parity is definitely where we think the dollar is going to have a lot of trouble no matter what. So unless this coronavirus really becomes something monstrous globally, which we hope it doesn't, I highly doubt that the US dollar is going to have a chance at getting up and sustaining a trade up there. More likely than not, it is running down out of gas. At least it is due for a corrective move and a test of this area right here at 97.39 with this last higher move low. Any failure from there keeps us in a neutral to bearish posture for the US dollar Swiss, which we think that no matter what, no matter how much of a bull the dollar is, the Swiss is a bigger bull globally versus most currencies. Right now, we're just grappling to see how it fares with the new extension of the coronavirus outbreak, with Italy now having a very large problem growing in one town specifically. So we will be monitoring this trade. This is also one we're going to come back to because we already have a trade on in this market. So and just to show you that we really are having live examples here, we have our Forex.com web trader on, since you can't see the account number, but this is a live account. We also have our Nadex binary option account. These are all for our videos. We don't have our major accounts up. And then we also even have for MetaTrader 4 users. You can see this is live, and we don't have our account number showing, obviously. So, but these are all live little accounts that we show how to execute trades for those of you that are part of our student base of followers. And part of the Forex Trading Unlocked army. So anyhow, we're going to go back to our analysis here before we get into the live trades and possible trades that we're going to put on as well. So we have the US dollar Swiss, which is a bear. We've covered the European ones. Now here's something you got to think about. The Middle East, what's going on. We know that now in Iraq and also in Iran, there's a bit of a coronavirus outbreak. And then we have to figure out what's going to go on with the Middle East. We have China and we have Europe that definitely is becoming a problem. It's starting to grow in the Middle East, which could become a very, very big problem because of the way the lack of control from movement around the that area of the world. If it starts to spread through Africa, it could be just a complete disaster. So this is weighing on the currencies around the globe, and the U.S. dollar right now is just a raging bull for that reason alone against lesser currency crosses. As you can see, the Turkish lira here, it is just exploding through new. It's been making newer move highs almost every single day, grinding and grinding and grinding. The only trouble with this one is the spread's very wide on this one. So unless you're an experienced Forex trader, I'd say it's really tough to get in and buy into these new highs because the swings are very likely to be rather large in this market. I mean, we could cut this upward sloping blue line here. We could easily have a nice correction back here and then bounce real quickly. Like you can see, like how we had this correction here. I think that this is what you need to look for right now is if you're a bull, it's tough to buy into this. You could take a lot of heat. And to be a bear, it's very hard to sell into a market that keeps making new highs almost every single day. But you can see it's starting to get very volatile. So I would look to buy into dips if you're a bull, and I would wait for a little bit more of extremes. And if you're a bear, I would be very tight with your selling. So be very careful. But this is a good indication of how the coronavirus really is being viewed around the world. So with this being a upside continuous breakout, we have to view this as a strength in the U.S. dollar and its implications globally because of where it's at and how it can affect other regions. This starts to become an issue in Turkey because of what's going on in the Middle East. We're going to have a very, very big problem globally because the world can only handle so much and there can only be so much help coming from other countries. And eventually this is going to become a very, very interesting global situation. This is not like SARS anymore. This is a whole new definition of global outbreak. So we'll see, and hopefully things can be held at bay. So now we're going to look at the U.S. dollar JPY. So for flight to quality currencies in the world, we have the US dollar, obviously. We have the Swiss franc, and then in the Asia, we have the Japanese yen. So the Japanese yen, believe it or not, is correcting against the dollar. Who knew? After blasting through those radical highs. Of course, markets come out like they go in, and you can see this market exploded like a balloon underwater, and now it's corrected back in this fashion here. What's going to happen? Well, right now, are we bearish? Absolutely not. This market has been a raging bull since the summertime, grinding through highs and then blasting through them. Now, here's the thing: is we had a projected high of 112 to 112.5 that we weren't looking to see this market reach for another probably month or so. We were looking for mid-March to maybe even April for that target to arrive. Well, we blew through $1.12 and stalled here right around a $1.12 quarter, just below that. So we just fell short of our upper extreme for our target, but we're way early on it. So this corrective move here, this is a tough one. It's choppy. This is very volatile from $1.09, it's 109.58 to 112.22. This is our big range right here. We're looking for swings. We're not looking for direction here. This is really, really tough. I would say if you're going to be a bull, you got to wait to buy into support down here or wait for a breakout here. If you're a bear, this is a tough sell right now because this could explode in your face. I mean, even if the dollar was weak and selling off against all the currencies around the globe, it could very easily rally in the U.S. dollar yen. This market is in a bull market. It continues to probe new highs, and it just seems like there's nothing you can do about it. Now, because of what's going on in Japan with the cruise ship and in China and now Taiwan and now a bunch of other Asian countries where things are upticking again with this outbreak, and especially with the World Health Organization saying that we are now almost at a pandemic level, this doesn't bode well, obviously, for many currencies, but since you need to have some flight to quality in every region, that's probably why you're getting supported in the Swiss more so than in the euro, and then also here in the yen. So I'd be very cautious right now trying to go against that trade. I think you're getting that corrective move on a daily basis, but I think this is going to most likely snap back within another day or so. So be careful selling into these lows here. This might be the extent of the move. Remember, the U.S. markets have only been open for a little over a half an hour. The dollar had come back in a big way because of the corona thing. Now the markets are open. It looks like the dollar correction wants to go back in full gear. Be careful with that one, where it could just be digesting, and this could be just the volatility that's because of this coronavirus that's going on. So right now, I think you're going to get bulls and bears could get really chopped up today. We have to see how the market closes to really give us any real bearing of what's going to probably head into the rest of the week, because we're just starting off right now. So let's take a look at this region and see what's going on here. So the Australian dollar, US dollar, which is just getting pummeled, made a newer move low today. Now it's hovering below the highs. Looks like it's trying to stamp a low, doesn't it? Well, it looked like that on Friday too, and look at what happened, how far it opened below yesterday on Friday's lows. So the question is this market a bull? No, not even remotely. Unless we get above this 67.51 pivot area, this market is a bear. I would not try and catch a falling knife here. This strength shows strength today is just a short-term, I think, head fake after the markets open, after having been closed over the weekend, absorbing the fears of the coronavirus first, and now it's getting a little recall, just I think sucking people in, being like, oh, we're pushing the extremes, it's not that bad, and then before you know it, the bears are going to be salivating on this trade again. So use caution with this market here for the Australian dollar, US dollar. So New Zealand dollar, US dollar, which is also in the same region, let's see how they're doing. So they're faring well also versus the dollar. Really interesting that we're not really having follow through today. We're just recouping what we had lost from Friday's gains. So as you can see, this market here didn't make a lower move low. It's got a little double bottom here, but where's the strength here? It's still below Friday's close. It's positive on the day, considering that it opened so much lower and gapped so much lower. But if you look at it, it's still very bearish. So we have to see how today's close. If we get a radical rally and sell off in the dollar, which lifts these other currencies, then maybe we can say the fundamentals are going to be overruled for a couple sessions while we get a correction versus the dollar that is long overdue. But it doesn't mean that it has to happen today or that it is going to happen for quite some time. This coronavirus is definitely something that is driving these markets. All right, so now we've looked at those markets. Let's go over to the US dollar, Mexican peso. Now, this is one we've been watching for a while because it's been a bear. No matter how bullish the dollar's been getting hammered versus the peso. As you can see, Friday there was some huge follow-through, and then today we have follow-through again with higher move highs. This one is a little bit of an interesting one because it really didn't look like they were going to even remotely be able to trend up to back to these levels for quite some time. And in 3 days, they've gone from the just above 18.5 pesos up to 19.25 pesos. Very significant rally, but still this market's overall a bear. It's just dollar strength obviously is showing its face here, right in front of the spring break holidays too. So maybe anyone who's going down to Mexico, if they're buying their pesos now at their bank, you're getting a better rate than you were able to get for the past 3 months. So this might be a time to jump on your exchange for your trip, because going back, you're looking at, it's been the lowest it's been in years. And yeah, you can see going back to, let's see, October, let's see, it was September of 2019 when it was back above 20 pesos. And now here we are trading at 19.13. So it's still fairly good. It's at the bottom of the range that it's been in for basically half a year. But looking the way it was trending going into spring break, it looked like you're going to have a better chance at exchange rate at 18 pesos or even 17.5 to the dollar than you are at 19. So very significant bull move here. We have an incredible gap from last weekend, from Friday into Sunday here, as you can see. But the strength is there, so we have to go with it. You had this bullish engulfing line that has all this follow through here. Did we see the high of this correction? very may well be. We'll have to see. I don't know. It's going to be really tough. This already has superseded any of our targets that we could have for this move. So we're going to use this last swing, lower swing high here as our key directional pivot. Now that we have a higher move high, we have a lower move low followed by a higher move high in a very short amount of time. What does that mean? Most likely sideways. I wouldn't get too bullish on this move. I think it's going to be more sideways than anything else. Overall, the long trend has been a bear. One move does not change a market's direction. So we shall see how it pans out. So also in this trade zone, let's go to the US dollar, Canadian dollar. This one's been an interesting trade. We had a bearish sell-off that had occurred on Friday, and as you can see, it reversed gears in a big way today. But then look at this. It had made lower move lows on Friday, settled lower, and then like just gapped higher this morning, and then kept on trading higher, made a higher move high, as you can see, on an intraday basis here. And then now look at where it's at. It's just hovering at the upper part of where this consolidation range has been here. So very interesting to see the weakness here in the US dollar Canada. So the question is that going to prevail or is it not going to prevail? Well, intraday we made a higher move high. So this is hard to say that we're going to be a bear still. We needed this little correction considering how steep this slope was. But right now, if you look at a wave theory, here's your bottom, here's your 1 wave, 2 wave, 3 wave. We've made our 4 wave correction. Now we're set up for a 5 wave rally. Does that mean we're going to get a breakout to the upside? No, we have to get above 133.31 to confirm any breakout. Otherwise, we're looking for a choppy trade between $1.32 even and $1.33.31. There's just no reason to get too bullish or bearish right now. Consolidation, this market's been trending higher for the past month and a half. Now we're getting this choppy consolidation. I think the coronavirus fears and also oil are having a big impact on this trade, and it's just very confusing for those that are Canadian dollar traders to figure out exactly what are they going to do with this, So right now we're going to have to see how it closes today. We initially were bearish on Friday. Now with this corrective move here, we're neutral. So I think range traders are going to have a ball with this market. And we're going to get into it because this after we get finished the analysis, which we're almost done with, and start looking at our trades now. So here we have the US dollar Canada that we looked at. Now we're going to go back to our euro US dollar and see how things are shaping up. So this is where we started off our webinar. You know that we have live trades obviously on. So, and let's see what's going on here. So we have the market trading at 108.56 right now. So the question is, should we take a look at some binary options? Should we be looking here at the euro US dollar, or should we be looking at the Swiss? So we're going to go down here. We are short the US dollar Swiss from 98.33. This is going on from Friday. We have our stop here at 98.15. You can see it's already a winning trade. So this right here, we've been following through with it. Now we have today's high as our where our stop level is, but now we're going to adjust this because this trade here is a corrective move trade right now, the way we have to view it. So this is how we're going to manage this one. So we're short right now the US dollar Swiss at 98.33, stop at 98.15, but we want to lower that. So how do we do that? So we are going to get it down to, let's see, we want to look at where is the, we're going to go to the US dollar Swiss, and now we're going to see how we manage this trade and change our stop. All right, so we are looking at today's, let's see, the open today was 98.41. We're trading at 97.70 right now. Okay, so that's a good lead on this trade. So definitely we want to be use our open now as any rally back. If we get above all the way back up to this area up by our opening price, odds are that's a big bullish momentum, and this market will be reversing gears. Remember, it's been in an uptrend, so we're in a counter trade trend. We had this bearish sell signal that occurred on Friday, and now we're confirmed, and we're running with it. So we're going to keep this going. Our open was, what is the trade here? It was at 98.06. So that's where we're going to move our stop down to. So we're at 98.15. We're going to move this down now to 98.06 and see what happens with that trade. Okay, so 98.06 even. So we adjust that. As you can see, so on the MetaTrader 4 platform, for those of you that use MetaTrader 4, excuse me, I'm getting tongue twisted. It's a very easy execution right there. So now we've managed that trade. So now let's see what's going on with the Euro US dollar, or actually the US dollar Canada. That was one of our trades that we were looking for here. So the question is, since we're looking more of a range trade area here, it's tough to trade this with the futures and the Forex contracts. So let's take a look at the Nadex area. We already have the weekly binary contracts. Let's see what's going on here. So we have, let's see, the 32.75, 33.25, a buck 32.25. So these three options right here, these are our strike prices that we're going to look at. We're going to look at the 33.25, 32.75, and the 33.25. So 33, we're going to use a horizontal line. We're going to go to a buck 33.25. Okay, so coordinates, that's a 0. Okay, so this here is one strike price to look at. And then we're also going to go to 132.75. This is another one to look at. And then we're going to go to 32.25. Okay. So these three blue lines here, I'll make them a little bit easier to see. So for those of you that are wondering what I'm doing here, these are three strike prices for binary options here. We have $1.33.25, $1.3275, and $1.3225. It's these blue lines, these blue coordinates here on this chart. All right, so we're looking here at the US dollar Canada. You can see that we have the 33 quarter, the buck 32.75, and the buck 32.25. Here is our pricing here. So the question is, do we want to be long, or do we want to be short, or do we not want to do anything at all here? So that's what we have to figure out. And now let's look at these numbers again and see what we can get. All right, so if we are a range trader and we are not looking for this market to break out over the next couple sessions or the next couple days while this trade manifests, then what would you do? Well, then we would be looking to most likely be buying into this $1.3225 strike and selling the $1.3325 strike because we're looking for the market to stay contained in this area. So by doing that, you don't want to be long, because these binary options are that the US dollar Canada will be greater than these strike prices. So the underlying market is the US dollar Canada, and the strike price, the question is, will the market be above or below? And this is that these options are stating that the market will be above. So if you're buying the $1.32 strike, binary strike, that means that you are saying that the market will be at that price or higher before at expiration. Obviously, you're buying time. You can get out at any time, but you have all the way until Friday for expiration. These are weekly options. So for a range trader, as long as the market stays above there to higher and stays contained in these pivot points, that would give you a potential winning trade. The strike here in the middle at $1.3275, this puts you right in the middle of the range. So whether you're a bull or a bear, I think you have a pretty much crapshoot as a 50-50 shot as to whether the market is above or below it. So this is a tough strike price to trade right here. Then we have this upper strike price here. If you truly are a range trader and you think that, or a bear, this would be one that you could sell into. So let's look at these numbers here. So if you were to sell the 33 quarter, you could sell it for 16 right now, or you could buy it at 21. So buying at 21 would mean you're a bull looking for a breakout. So you could have a nice reward to risk ratio here as far as how much you could gain. So like for instance here, let's say we were to buy one right now. Let's say you're a bull and you think that this market's going to go higher. Okay. Let's get our ticket up. Why isn't it loading? Well, that's not good. It is live. As you can see, there's a balance. But we're not getting a ticket. Oh, here we go. All right. Very slow. All right. So if we were to buy it right here, you can see that if we did one, right now your maximum loss would be $21. Your maximum profit here is 78.5. Okay. So now let's go back here to this option here. So if this is just a corrective move and the bulls are about to come back for this market, then odds are that we could be easily seeing a breakout above this area, or that the market could get up to that $1.33 sometime in the next couple days. It almost reached it today. So the question is US dollar weakness really here, or is US dollar strength going to be coming back? So let's do another quick little jaunt around the globe real quick to see how things are faring. The market's only been open for a little over an hour here in the US, so let's see what's going on. So we were looking at the euro US dollar that was pressing resistance once again. As you can see, it's still hovering below resistance, but it's not quite pushing the bid the way it was before. It's looking a little bit like it wants to run out of gas. So this is a tough one here. So is dollar strength really going to prevail, or is it not going to prevail in this situation? Well, right now we're looking at this coronavirus where it will prevail right now as far as the numbers. So we're going to go back to the US dollar Swiss and see what's going on here. Now remember, we are short this market. We just lowered our stop, and that was for a reason, because this market could easily fall back in our face. So now the question is, will it? We don't know. Right now we're working it. So we have this trade right here. We're already entered in this one. We're going to leave this one out with the binaries, but we are looking for dollar strength or dollar weakness. This is showing dollar weakness. So with this market here, we're not looking so hot with this. Newer move lows, dollar's not looking good. So now we're going to go back to the British pound US dollar, just because we're trying to get a gauge on the dollar index. We know that the lesser currency crosses are getting pounded versus the dollar, but as far as the yen, not so. Now here we have the British pound US dollar. Look at this. The pound was much lower all day long, and now it's rallying. So pound strength versus the dollar, not necessarily. This is still a very neutral market. Still lower on the day, not looking good. So we'll go back to the euro US dollar again, just to see something else now. So we've been looking at the daily part, and these are all daily trade setups. What we haven't done is look at the hourly, just to see what kind of things are shaping up. Well, this is very interesting, isn't it? So we had Friday where we had this gap, and the market just collapsed. And you can see how that traded. And look at how it traded last night. It still kept in there. And then the U.S. market's open, and then all of a sudden, boom, this gap is filled. So the question is, you've been making higher move highs and higher move lows, but what is really driving this market? I mean, it was the gap that did it. You know, I think that what you have here was, this is your last selling chance before the market starts to turn south once again. So if that is the case, and we start to see dollar strength come back in, how is that going to help us with the euro US dollar, or the US dollar Canada? So US dollar Canada, here we go. We're going to do the same thing and see what happened here. And oh, wow, now look at this. So this market has had a lot of volatility the past few sessions, but look at what happened here. We had Friday with this big gap, and then we have here with today, it ran up, but now it's actually been trading lower. So the question is, once again, what do we do here? Now we had initially a sell signal up here, but then what do we have? We haven't reached our target zone yet. You know, so the question is, where are we going to go here? It looks like it's bearish. It really does. It doesn't look like it's bullish. So once again, I think you're going to have to play these binaries as far as a range trader right now, since we don't have a confident buy or sell signal. Like here we had this bearish engulfing line, and then also on Friday we had a reason to sell the market when it had opened because of what had gone on with the prior day, where we had made lower move highs, lower move lows, and we had a failure. So here we had a stop that had gotten triggered off, and then it was a quick little scalp, and that was it. That was a one-day trade. So right now, this is tough. I would think that if you're looking as a bear, you can sell these two upper strikes right now for a short-term trade, looking for a test of support. And I would, once you get down into this area, be very cautious hanging on. And then as a bull, I think you can get long, for low risk or high reward to risk ratio, buying these upper two strikes. If we get the breakout, you're not losing that much, because if we do take out this lower pivot at $1.32 even, it's very likely that this market is going to start to hammer new move lows. And we don't know. Right now, there's too much indecision going on with the way the U.S. markets have opened. We had this nice little bull rally, but it looks like it's just a trap, and that the market's going to fall back on support and follow the original direction of today. So we have the trades that are already on. We're working them. We are short the Euro US dollar, or excuse me, the Euro US dollar from, 108.20. We're taking a little bit of heat right now. And then we are short the U.S. dollar Swiss. So yes, the Euro U.S. dollars trade right now is a little bit of a counter trend trade, or is a trend trade. We are with the trend, but right now it's in a correction and it's pushing the upper extreme for this breakout. But like I said, that's with the fundamental with the coronavirus. That's why we are in that trade. Right now we are looking to put on some binary options, but it's tough with the volatility. We have to see how we get a close today to get a valid signal. So right now we're going to close out this one. We're not going to play around with this one since we don't have the valid signal. As you can see that we are right now, we are short just with our stop right around these highs here. So we probably, if this market does continue with its follow through from Friday and absorbs this slide that it has today, then our counter trade in the Euro US dollar is not going to work out too well. So now the Euro US dollar, we were long going into today. We made money off that trade. The market came back. We got stopped out, and then we reversed gears just because it looked like fundamentally this coronavirus was going to really seep into this trade again. Now we look at this one on the hourly. As you can see, we got our stop just right here, right below the highs here. So we're hovering right here. So if we fail right here and then the market starts to come back today, well, then our short's looking really good because we'll have made a lower move high, and then we will be looking for this market to continue to go lower. So we'll see how this pans out. We have to wait for the session to close today, and then we can confirm our trade, our either new trades that we put on, or we'll be reversing gears once again. So their fundamentals are definitely driving the US dollar bull, and technically it's overdone. And it looks like the technical part of the Euro US dollar trade is being overwhelmed by the bulls, and it looks like they want to take this market higher. So this is very interesting to see how the dollar is a little bit in flux today. It looked like it wanted to make a nice turn versus most currencies on Friday, which it has and is continuing to do, but then also it's against certain markets it isn't. So we have a little bit of divergence going on. We have a couple trades set up. We saw that we are short the US dollar Swiss, and we are short the Euro US dollar right now in front of these highs. And obviously this is our pivot. You know where we're at, so we know we'll be looking to see what happens over the course of the day to manage these trades and also possibly get into some new ones. Definitely after today's close, we will be looking at the binaries to find some strike prices to start to play with this volatility. So let's see what happens. We have a long session. The U.S. markets have only been open for 1 hour, so that does not make a trading day, does it not? So let's see how things manifest, and we will be back with you later. So for all of your Forex trading needs, always come to www.forex-trading-unlocked.com, and please subscribe to our YouTube channel so you know when we are coming out with these analysis videos, as well as different lessons and other content that we put out on YouTube that's helpful to Forex and futures traders and even equity traders. You trade ETFs, you can trade the currencies too. So we will talk about that in other future videos. You have a very good day, and we will see you soon. Thank you very much for your time.